Absolutely. Business is harder to do. We're doing more business than we did last year. Our business will be about $2.5 billion with both construction and bridge lending. However, it's just twice as tough. I mean, honestly, the construction takes longer because costs are up. And then on the bridge side, there's just so much competition. So we're definitely busier and working harder than we were last year.
We bought one building in 2017. It was off market in Long Island City. This year's been very busy. You haven't, on a transaction basis, you haven't seen that much volume transact in the market overall, especially in the space that we have our expertise in, which is office in Manhattan. But in the industrial space, we're very busy.
We've seen really good loan opportunities. Acquisitions are up 10% year over year in 2018 versus 2017. So the equity sponsors are acquiring more assets, and we're there to finance them.
This year we've been focusing a lot on industrial properties in the boroughs.
We're doing more volume this year than I ever had in my entire career. We may end up with a number between $12 and $15 billion of deal origination, which is, a meaningful jump from any other year. I believe last year we did about $8 billion. It's really across all asset classes, but a big portion of what's keeping us busy is what I'll call structured finance. Deals that are either coming out of some form of construction or redevelopment, or we're refinancing them prior to them actually fully being stabilized.
Financing acquisitions of value-add transitional business plans across the country. We are focused on lending to real estate private equity groups and others that are looking to transform real estate and make it usable for the next generation, and with a focus on the millennials.
I would say travel. We've been doing business all over the country, mostly on the East and West Coast, and so we do a lot of business in New York and in LA and all the way up the western seaboard.
We're not looking outside of New York City proper, but we're focusing a lot on the Bronx and Queens. But those aren't outside of New York, of course. To a New Yorker, those are outside of New York.
Absolutely. We're based in Beverly Hills, so we do a lot of business in LA. Right now, the biggest deal that we just closed was the J.H. Snyder deal that is in Mid-Wilshire. It's an apartment project, 20-story luxury apartment project.
We are actively lending in the Arts District, downtown, and we're also active on the creative office in the El Segundo area.
Yeah, we've been very active in LA over the last few years, primarily in the hospitality space. We did 2 years ago a construction loan for Steve Witkoff and his partners, the Addition West Hollywood, which includes 20 condominiums. It's been very successful. I believe the condominiums are primarily sold. The asset will open in March, and we're actually refinancing it now. We're in the process of closing a large refinancing for an asset in West Hollywood called The London for a partnership comprised of Northwood investors. We did the acquisition loan when Starwood bought what's to be its sort of franchise one branded hotel in West Hollywood a few years ago as well. So we've been very active in the space.
Everything. Whether everyone wants to come to LA. The market's always good, strong. I mean, basically, if you look at all the 4 food groups, they're all very, very strong. They're consistently there. It's very difficult to build, which actually makes construction lending much easier and more competitive, though.
The demographics and the growth trends in LA have been pretty amazing, similar to other primary markets. But there's just a lot going on in LA and a lot of very sophisticated borrower sponsors that we would like to be clients.
In and out. Got to be in and out.
Shake Shack, but I'm a New Yorker. Lakers.
Lakers, go LeBron, of course.
Celtics.